Chris, we've seen some interesting changes in the markets, and it seems like money's flowing back to U.S. stocks and then not to the other risky categories like international and commodities and things like that, right?
Yeah, we've definitely seen some significant changes, especially from the last time we've done the podcast. Domestic equities, like you said, Brian, it did gain 5 points. So we have seen almost a shoring up of the U.S. Markets from a relative strength standpoint. But the 2 and 3 positions, both commodities and international equities, lost. And the biggest loser was international equities in the 3rd position, which lost 21 points. So it kind of slowed down to 215. Some of that could have been in between. We had some news continue to come out of China. You have a lot of supply chain shortages going on. You have oil has been a big concern, especially in gas, really, in the European Union. So, we're seeing just a little bit of slowdown there. Commodities in the number 2 position slowed down. It went down 4 points to 264, so not quite as bad. That's probably even a little bit of moderation with even agricultural. There's so many commodities that play in there. We've just seen that decrease a little bit. And then the bottom 3 asset classes gained. Fixed income gained 7 points. It went to 127. Cash gained 8 points. It moved to 103. So now it's surpassed that 100 level mark. It's back in the hundreds now. And then currencies gained 4. So it's in the 54th position. I think it begs the question, what does this really mean? And, I don't think as it stands now, it doesn't mean a whole lot. I mean, it means maybe you'd say some short-term volatility in international markets. It's promising that domestic equities is going up. And I'd say commodities, even though it's a -4 number, it still is remaining relatively constant. I just think we're seeing some, whether it's geopolitical or other kind of news from the global markets that are just causing them to, show some short-term volatility, which is kind of being displayed here. And I think on the flip side of it too, domestic equities, if you guys remember, this is all relative. Domestic equities have been doing extremely well. So I think some of this could be, the domestic markets pulling away points from the international markets.